Hey folks, Dan Frio here with your real estate update for June 27th, 2025. So mortgage rates, they eased yesterday. They eased every day this week. So what's going to happen today? Well, we had two big pieces of information coming out. That's the PCE, the number one inflation gauge that the Federal Reserve monitors. And then we also had a Fed official coming out saying he's expecting still 2 rate cuts this year. So how's all this news going to affect these things over here? Well, that's what we're going to talk about in today's video. So folks, my name is Dan Frio. I actually do this video twice a day because I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. So if you're out there looking to buy or refinance, I'd love to be able to help because I'm licensed in all 50 states and we have a slogan. It might be a little confusing and I'll explain at the end of this video. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, I'll give you that at the end of this video. You're here for these things over here, so let's get to it. So here's what we got on the news today so far. We had the Fed's preferred inflation gauge shows prices increased. It accelerated, so we're going to take a focus in on that. But we also see right through here, here's what's taking the headlines right now. China confirms details of a U.S. trade deal. So those are the things that are affecting the markets right now. So far, the Dow Jones and all the indices across the board are doing pretty darn good. We have the VIX down, and that's saying the anxiety level on Wall Street's still dropping. Let's get over to oil, see how oil's doing. It's at 65.88. We like this at 65 or below, so that's a little bit inflated. We'll see how that goes from here. But what we want to talk about right now is inflation, the PCE, the number one gauge that the Federal Reserve monitors. It just came in today, and there's a whole slew of numbers here. But instead of me going over these like this one by one, let's get over to Rick Santelli at CNBC to see what he has to say about these numbers. Then I'm going to show you the market reactions on bonds as also equities. So hang tight. Rick, take it away for me, buddy.
Personal income and spending numbers for May, plus the Fed's favorite inflation gauge, PCE data, Treasuries, Rick Santelli. Let's do it, Rick. Tell us what you got.
Yes. May income, spending, and all the inflation numbers. And there are surprises here. Personal income, which really has been quite strong throughout 2025, takes a bit of a hit here, down 0.4. We were looking for a number up 3 to 0.4. This would be the first negative number going all the way back to what? September of 21. And
so what he's saying is personal income starting to drop in this report. It's been pretty robust up until this point. So that means people are making less money. If you're making less money and inflation's going up and you're not outpacing inflation, it's going to be pretty tough. So that's why this is really important. And I've been focusing in wages for the last 6 months or a year because they've been continually increasing, outpacing inflation. And now what this hit's going to do for things, we'll have to focus in on that. But let's keep going.
that's where we comp this to SEP of 21 when we were minus 0.6. Now, if we look at spending was down 0.1. We were expecting up 0.1. That equals where we started the year at down 0.1. To find a bigger negative number, you're going in the Wayback Machine to Feb of 21. Now, if we look at real spending, of course, it's going to take a bit of a ding. Question is how much? Down 0.3. We're expecting this to be near unchanged. This would be the second negative number on real spending. We started out the year down 0.5% before we really jumped up in March to up 0.7 to somewhat negate it. So down 0.3 would be comping to the very beginning of this year. Now to the inflation data. If we look at the PCE on a month-over-month basis, exactly as expected, up 0.1. In the rearview mirror, up 0.1. The best that we had this year was unchanged in March. If we look at the year-over-year PCE, we are at 2.3, exactly as expected. In the rearview mirror, 2.1 now becomes 2.2, so there is an extra tenth of heat in the rearview mirror. Now,
okay, so when he explained that, he said previous number was 2.1, but it was revised to 2.2. So meaning last month's report was 2.1. It was revised to 2.2. Now it's 2.3 based on this month. So could it be revised, a couple weeks from now down to 2.2 or up to 2.4? We'll have to see. But that's when he talks about revisions and the last readings and so forth. You have to pay attention to that because a lot of these numbers get revised up so that if it then goes up again at the next reading, it might not be as big of an increase as we think. So let's keep going.
Year over year, core numbers, these are probably the most important. On the month over month core, up 0.2. That's 0.1 hotter than expected. 1/10 hotter than the rear view mirror, and it basically would comp to where we were in the beginning of the year. February, we're up 0.5%. And finally, 2.7, that's the core year over year. I know Becky was talking about it earlier. This is most likely what most are going to really concentrate on. It's 1/10 hotter at 2.7 than we were expecting at 2.6. And in the rear view mirror, there was an upgrade from 2.5 to 2.6. So there is a stickiness here, and this stickiness has remained for quite a long time. We have made progress. Things aren't really necessarily getting worse, although a couple of tenths here and there on revisions. But I guess the real issue.
So what he's going to talk about now is this is where we really want to focus in on. Where has bond yields and actually mortgage rates gone over the last week or so? Because have we had a good week? I keep telling you guys every day, yeah, the rates are coming down, down, and down. Let's see what Rick has to say. Where were we last week?
To take a step back is it still doesn't look like 2% is in the crosshairs, and that's the Fed's amount. That's their target for some of these numbers. Interest rates, big moves on the week, not on the day. At 4.26 right now in a 10-year, we're up 2 on the day. But on the week, remember that what we have in a 10-year right now, we closed last week at 4.38. We're at 4.25, 4.26. And in the 2-year, we closed last week at 391. We're currently at 327, at 372, 373. So you can see there has been almost a 20 basis point move on the short end, and the curve steepening. Well, that probably is because of this notion of a pre-announcement on the Fed chairman.
Okay, so that's that part of it. But we also have news coming in from Federal Reserve member Kashkarian. He just came in and basically said he's still expecting 2 rate cuts. So I usually don't do this, but we had 2 pieces of breaking news today. Usually we don't do this, but let's get over to what the Federal Reserve, one of the people that sit on the Federal Reserve, has to say about these numbers and what he expects in rate cuts, because this is important for us to figure out where rates are going from here.
I'm here.
And if we're talking about this, you might as well tell us what he said.
I'm going to tell you what he said. Exactly. Really interesting comments, by the way. First on what he says about policy and then the why on the policy. He sees a possible first cut in September. He maintains his outlook for 2 cuts this year, but he's adjustable on that. He says the tariff impact could be delayed or it could be less than expected, and provides interesting reasons why both could be true. First, he says companies could be finding ways to avoid tariffs, adjusting their supply routes to find lower effective tariff paths. The actual tariff rate so far, he calculates, is actually closer to 8%. Which is triple the current rate, but smaller than the actual headline tariff rates that have been out there. Monetary policy, he says, should focus not on the actual shock to the economy, not the headline announcement in some of the political pronouncements. On the other hand, he says it could be delayed. Notes, only cargo loaded on ships after April 5th has been subject to these reciprocal tariffs, and imports can take 45 days and then longer to hit the retail shelves. So higher tariff goods may only now be making their way to customers, which would explain a delayed impact of the tariffs. Fed should not commit to easing policy in case tariff effects are delayed. If tariff inflation appears later, the Fed can cut and then stay on hold. So it's a pretty interesting, he doesn't give you an...
So even the Federal Reserve officials don't really know what they're going to do. But if we go over to the Federal Reserve, what they're expected to do, in 33 days, they're meeting again. And now this number keeps going up a little bit. The July, September rate through here, it's now at a 73% chance they're going to cut rates, because here's where the federal funds rate is right now, at 4.25 to 4.5. It's expected to stay there at the July meeting, 80% chance. But then the numbers are turning from there, and it's looking like still maybe 2 rate cuts in the cards. So that's what we're seeing across the board right through there. For the economic calendar, we'll break it down real quick. FOMC Williams spoke this morning. PCE numbers all came in, personal spending, everything that Rick Santelli gave us there. When we go back to this, doesn't really look like the markets are that much concerned. Let's go over to the headlines that we're seeing through here again with the Dow Jones, but I want to go back to the bond market to see how that's faring today. So right through here, wow, stocks are up another 200 points. They're up 400 yesterday and another 400 or 500 the day before. So we are on a rampage across through here. If we go to the bond market bond market isn't as affected this morning as I thought it was going to be. Right through here, it's basically flat. It's only down 0.08, 0.8. So that's basically, I thought as soon as I woke up this morning, I saw the PCE inflated a little bit higher than expected. I'm like, this is just the catalyst that the Wall Street needs for a sell-off because we've had a huge rally going into this point. So far the markets are basically flat right now. The 10-year Treasury as well, but we'll go to that 5-day chart to see where this week has taken us. Basically from the beginning of the week all the way to just now, we had fantastic news on interest rates. They've been dropping every day. So if you're locked in down here and you want me to quote and see if I can get you something lower or maybe even lower fees, love to be able to help you out there. If you're looking to refinance, love to be able to help you there as well, because if we go over through here, here's what I do. Folks, I said at the end of the beginning of the video, I'm actually a federally licensed mortgage loan officer. I'm not a YouTube specialist. I do this to just promote our business. I used to be on Christian radio actually in Chicago for 15 years. I couldn't do that any longer because of COVID, so I had to start recording and doing all the stuff myself. So I was like, hey, let's just podcast this stuff and see what happens. And then I start YouTubing in, and then here's where we are today. So I've been blessed throughout the years to help people, and hopefully I can be able to help you if you're navigating, looking to buy or refinance. So check out my website. It's therateupdate.com. I work at a federal bank, like I said, but our slogan is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? Well, basically, the federal bank that I work with, we're set up with 32 other lenders. Why? Well, it's to help you guys out, because you're out there. What are you probably thinking? Okay, I need a mortgage, so I got to get four or five quotes. Why don't you just let me do it? But instead of putting in your application there, have everybody pull your credit, you're uploading all your financials. Why don't you do it just in one spot? You can do it right through here. So at therateupdate.com, that's where you go to. You can give us a call. Here's our phone number right through here. If you want to ask me a question, just click Ask Dan, put in any information you have in there. If you want me to look at your rates or a rate lock that you have or a loan estimate, we used to do that. It was called LE Reviews, the Loan Estimate Review. Well, just put it in here. Send me a quick comment right through here. Send me the comments. I'll send you an email back with my email and a welcome, and then you can send me over your loan estimate for me to review it for you. But if you're out there looking to buy your first house, or maybe in a second home, or not a second home, but you're moving up or moving down, check out. We might have a program right through here. It gives you up to $7,000 in down payment assistance. Not even if you're a first-time home buyer. It could be maybe your second home or third home. I'm not talking like a beach home second home. I mean, you bought a house and now you're moving up or moving down. So check out that video. If it's a little bit confusing, just reach out to us, folks. We'd love to help you in any way. Give us a call, schedule an appointment, or put in your application, and I'll be calling you after you do. Thanks for watching, folks. We'll be back here at the closing bell to let you know how these fare for the day. Thanks for watching. God bless. Have a fantastic afternoon. See you then. Bye-bye.